Hello, and welcome back. Thank you for joining us for the first two webinars, and this is the third one where we are going to look at finance and in particular theatre tax relief, and we're going to touch on a couple of other things, pensions being one of those. So for those that haven't joined us for the first two webinars this morning, just a little bit of an introduction. I'm Zoe, I'm General Manager of ITC, and this is...
I'm Charlotte Jones, I'm Chief Executive of ITC.
This webinar is part of a full day, a full virtual open day, ITC 999. And it's an opportunity for those of you that aren't ITC members. I mean, even if you are an ITC member, you may be joining us as well, which is lovely. But those who aren't ITC members to access some of the benefits of membership. So we have got a number of resources online that are going to become available. So the resources around finance will become available after this webinar and will be available for about an hour for you to be able to download some help sheets and some bits and pieces around finance to support this webinar. What we're going to do is we're just going to talk about some of the kind of key issues for the sector in finance for a little while. And if you have any questions that you want to send over to us through Facebook, please do, or you can tweet us them and we'll be able to answer those directly. We're going to be here for about 20 minutes, so we'll talk through some things and we'll answer some questions in that time. We also have our training season for autumn available on our website at membership rates. So you can access those training courses for a discounted price if you book today. And if you are in the local area and you want to come and have a networking drink with us, we will be in the Albany Garden in Deptford at 5 o'clock having a glass of wine. So if you happen to be in the area, do come and join us too. So let's jump into finance. So Charlotte, let's start with the kind of key issues, the really important things that people need to sort of think about in terms of finance.
Right, Zoe. Well, I suppose one of the top one on my list is theatre tax relief. I never let a room full of theatre practitioners leave before telling them about it and trying to make sure they understand it. So if you don't mind, I'll spend a few moments just going through some of the basics of that.
Who go, oh, what is that? And it's such a fantastic thing.
Absolutely. So about 3 years ago, theatre tax relief was brought in, and it was based on the film tax relief, which already existed. It was one of George Osborne's little rush through bits of legislation because it was quite keen on these sort of creative industries tax reliefs. So the most important point to take away about theatre tax relief is who's eligible for it. And it's pretty much anyone making a piece of theatre. The only qualifying criteria is that you need to be a limited company. And the reason for that is because theatre tax relief is actually part of the corporation tax system. You don't, however, have to have paid any corporation tax necessarily to be eligible for it.
So as we said on our first webinar this morning, one of the benefits of incorporating as a company, a registered company, is theatre tax relief. That video is still available on the Facebook page.
And a lot of members ask us actually as well whether it's whether charities are eligible for it. And the answer is yes. And obviously charities don't usually put in a corporation tax return, but you can voluntarily put in a corporation tax return and claim your theatre tax relief.
And is it only not-for-profits, or can you be set up as a company limited by shares?
Yeah, it can be both share company or a guarantee company, and it can also be guarantee company with charitable status. All of those are eligible, and I would really stress that because an awful lot of people there's a lot of mythology out there going, oh no, charities can't apply. They definitely can. So you can apply for, or you can claim for, the costs of putting on your theatre production, basically. Everything up to the first full paid performance. Because it's based on on film tax relief.
Mhm.
It's based on this idea that all the expenditure on that film before it goes into the can and is distributed is what you can claim for.
Right.
So they kind of packaged it in the same way for theatres.
Mhm.
And when I say theatres, it's theatre companies as well. So
Right.
it don't have to be a venue.
And can you be all art forms included in that? Dance, circus?
Yes.
Theatre is quite a wide.
Yeah, it is a broad.
term.
It is a broad term. The definition they do require you to have a kind of story with characters.
Right.
So, but theatre is interpreted quite widely, and yes, dance companies have been able to apply. There was a bit of a problem with circus to begin with, but now some of the circus companies have been able to access it as well.
Great.
And the things that you can claim or that you can put through on that claim are if you commission a writer, the full fee for the writer, the cost of the director, so the director's fee plus their kind of rehearsal fees, the cost of performers, actors or dancers during the rehearsal period, only during the rehearsal period though. Once you're on tour or once you're actually performing to the audience, you have to stop.
Mm-hmm.
And no, you can't front load the wages into the rehearsal period. We're always asked that. So the cost of rehearsal space, the design and build of your set, even taking down and trashing the set, actually, you can claim for.
Right, okay.
Research and development as well into maybe a devised piece or into a writing piece that people have been successful with claiming that.
Right.
Your producer's cost, the cost of your actual producer, that's a person working, and up to the point of first full performance, all their fees you can claim for. So how much can you claim? Well, there are two rates. There's a higher rate if the show is designed to tour. And don't get confused, you can't claim for any actual touring costs.
But if that's
for the creation
if it's going on to
that's
tour.
right, if it's going and the actual point, even if the tour completely falls through, the intention to tour is the important thing. So if certain numbers of venues fall through, it doesn't necessarily eradicate the opportunity to claim the touring level.
Okay.
So it's not actually for the tour, but it's a higher rate, and that is at 20%.
Right.
And then the lower rate is if the show is going to be put on in just one place, and that's at 16%.
Okay.
The things you can't claim for are finance, legal, and marketing. Basically, those are the costs you can't, and obviously anything that happens after the first paid performance. It's done through the corporation tax system. And you need a special form, the CT600 it's called, and the slightly complicated thing is that form is only available online.
Okay.
And you will find accountants out there saying, oh yes, we can claim it for you, because accountants will have that software, but you can get that software yourself.
So you don't need to work with an accountant.
You don't have
necessarily.
to. No, you can
What's
do it
the form
yourself.
called, sorry?
CT600.
Okay, great.
And that is, you can actually get the software for that on the HMRC website. There are various firms available that types of software. It's about £40. So you don't have to pay thousands of pounds to an accountant to do this for you.
Yeah.
It's not hugely complicated and it's not very difficult. And if you're not sure about what you're claiming for, just put in a contingency, because if the worst case scenario is you maybe claim for something you shouldn't have and it's claimed back.
Right.
So just put in a bit of a contingency to make sure that you cover any mistakes.
Yeah, absolutely. And it is something that if you are an ITC member or if you decide to become an ITC member, our finance manager, Kevin, who unfortunately isn't able to be with us today, can help advise on that process of claiming TTR and kind of help you through your first one, so you've got an idea of how that process works. Great.
And I think, well, I'd say the second thing that people ask about an awful lot is pensions.
Yes, yeah,
because obviously
we do,
now everybody is obliged to operate contributory pension schemes. So it's been coming in gradually, and now even the smallest employers have to do that.
Yes, offer.
And that's probably more in your area of expertise, Zoe, since you do the payroll.
Well, yeah. So, I mean, I do payroll here, and we obviously provide pension contributions for our employees. It's relatively simple in terms of payroll software. You have a sort of bolt-on within the software that is a sort of pension provider. So we're with People's Pension, there are other ones. And what you do is you take off the contribution of both the employee and the employer, and then that gets sort of sent over, baxed over to the pension provider, and then distributed into their sort of pension pots.
And the rates have been steadily going up.
The rates have been going up. So they started off at 1% and they've gone up sort of over 3 years. And we're now at 5% for employees and 3% for employers. So you can, if you're an employer and you want to give a bit more than that, that is possible. If you're an employee and you want to contribute a bit more than your 5%, that is also possible. But they are the kind of base statutory amounts. You can't be paying any less than that in terms of.
Are they going to go up further? Do you know?
Not to my knowledge.
Right.
No,
so that's it.
I
That's
think
going
that
to be the
is going to be the rate, or
Right.
at least until we find out otherwise. But that's. I haven't had any information about it going up next April.
Yeah.
Quite often we get asked about pensions and performers and how that works. Now, because performers are workers, and we will be touching on that a little bit, I think, actually you did talk about that in your last webinar with Thea. So this whole sort of freelance employer thing, where you've got performers, they are workers, so they are entitled to getting a pension. That is one of their rights as a worker. So there are a couple of things. One is that you can postpone that. So you need to send them a letter saying, we are postponing your kind of auto-enrollment to our pension scheme because we are only employing you for less than 3 months, 12 weeks. So there is that opportunity. If they want to opt in, that's their right, and you do need to then enroll them into your pension scheme. Right. If they are with Equity, Equity has, if they're on the Equity pension scheme, Equity actually has a specific pension provider, First Act, and we've got some information on the website about how that works. But again, it's sort of similar. You're taking the contributions and you're sending it over to that pension provider, and they are basically keeping it on, putting it into the accounts of the performers. It's quite nice because it means often as a performer, of course, you're going to be doing lots of different things, and that pension moves around with you. So it's quite a nice scheme for performers to be part of. So that's the sort of basis of pensions. They seem a lot more complicated than they are. And realistically, it's just about sort of taking off those percentages and sort of putting them in a pot. So they are being sent over to a pension pot.
And it doesn't have to go through payroll, does it?
Not if you are paying performers. So you need to provide a pay slip if you're paying performers or stage managers, but that can be a template one that you don't need to put them onto payroll. So no, you can, and even if they are to, say you've got them on a longer term contract, you could get in touch with your pension provider and ask about how you can put them on without them going through your payroll system. It's all possible. So,
great. Thank you very much. Yeah. So obviously those are kind of a few things to think about budget-wise in terms of this tax relief and pensions. What else do people have to think about when planning their budget?
Well, it's a good question. Yes, quite often actually when people are thinking about putting on a performance, they will forget to put a line in for pensions. Quite often holiday pay as well is something that, again, performance stage managers are entitled to. So having the holiday pay included in your kind of performance rates, the rates that you are going to be paying your performers, is a really important thing to remember as well. We quite often get asked lots of questions around rates of pay, and rates of pay are something that are always available to see on our website, whether it's ITC 999 or if you're a member or not a member. So it's a really good, they are agreed with the unions. They are really great. They are the minimum rates that we've agreed for paying performance stage managers. We've also got directors, writers rates there as well. So it's a really good way of sort of starting the budget is looking at those rates, working out how many weeks of rehearsals, how many weeks of performances you're going to do.
And when people apply for Arts Council grants and so on, we get constant calls, don't we, for those rates, because actually the Arts Council treat them as their sort of bottom line as well, and what they expect to see you paying industry rates. And that's not national minimum wage. No. It's higher than that. It's, you know, we're talking about skilled performers who have trained for a long time. You know, the minimum that you would expect to pay them is the ITC equity.
And that's exactly it. I think Arts Council and other funders are looking for sort of best management, and they're looking for good management practices. And actually, if you're putting in those rates, and thinking about things like holiday pay and per diems and you know, sort of travel allowances and all of those things, you're showing that you're really coming from this from a very professional point of view. And you're not going to, it's not like you're going to be frowned upon, of course not frowned upon, but that your budget is too high for them. They'd rather that be a real indication of how much it costs to put a production on.
Absolutely, realistic, genuine value. Don't undervalue yourself.
And don't undervalue yourself. So that is another great sort of point just to mention when we're talking about budgeting. If you are the producer of this piece or the director of this piece or whatever your role is within this project, make sure that you budget and fundraise for that role, and so often people don't. It's really important that you value yourself within a budget.
Pay yourself too.
Please do. So we quite often get asked in terms of kind of income about sort of in-kind support, that is, and you know, sort of how that works and how that works within the budget as well.
So that's yes, there are certain things when you're putting in a budget to a funder and so on that you can actually count as value.
Yes.
So that might be somebody offering you in-kind help like free rehearsal space, or might even be some sort of free advice or free work. Although what I would say is don't, as the producer, put your own. Don't
put yourself as in-kind support.
You know, pay yourself real money. But yes, it is possible to factor in the money that you get, the value that you get from free support, and that can be treated as what they call matched income.
So, for example, if you were offered some rehearsal space, a couple of weeks rehearsal space for free, knowing the actual financial value of that and putting that in to the budget to say this is money I would have spent on this, but I'm getting it in kind is really important.
Because the Arts Council will not give you a grant for the whole of the cost of what you're doing. So you will need to show that you're getting support from other areas.
And
but
just
quite flexible.
Referring back to theatre tax relief, how can that be sort of used in terms of match funding as well?
Effectively, I think it can, yes. It is income. It is income you would take into account in terms of your budget, your income side of your budget.
So you need to be factoring that in as well.
And finally, you ought to say something about VAT, I suppose. People always ask us about VAT, don't they?
Yeah, they do.
Do you have to be registered for VAT?
You don't have to be registered for VAT. There's a threshold, right? So it's over 85,000.
Right. So if you've got £85,000 turnover, you are forced to register for VAT. And that means that you can charge VAT on. In fact, you have to charge VAT on the things that you sell, your services, and you are able to put that into a pot and claim against the VAT that you pay.
That's exactly it. It's a kind of, you're almost like a holding person for VAT for HMRC. So it's about sort of you hold the VAT value of the items that you have sold, the services that you know, whether you run a workshop or whatever with VAT, and vice versa when you're also paying VAT on stuff. And this is all done very easily through an accounting software. You know, you're sort of basically splitting off the VAT and it's all going into a different place, a different pot. And then when it comes to a VAT return, which are now very simple sort of, your accounting software holds all that information for you. It basically sort of offsets them against each other, and you either pay HMRC something, or sometimes you get some money back, depending on how it then sort of levels out, really. So yeah, it's worth mentioning, because I think we've come to the end of our 20 minutes, very quick 20 minutes, that we run a number of courses on finance, and they'll be coming up in the autumn term. So we've got financial management, finance explained, and also a course on budgeting, a half-day course on budgeting. And in the morning of that day, Kevin runs a course on VAT, national insurance, tax, and pensions. What more could you want? And so, so if you're interested in sort of developing your finance skills, or it's an area that, because who goes into the arts to do finance, really? So it is an area that we really recommend that you put a little bit of investment in to feeling confident around that area. So yes, do have a look if there's any courses that you fancy taking.
Sorry about all the art going on outside.
Carnival outside today. Yeah.
Right. Okay. Thank you very much. Look forward to seeing you talking about employment law.
Yeah, 3 o'clock employment law. See you soon.